Great. Welcome, everybody. Today is August 7th, 2025. We are here with the ESS Finance Subcommittee meeting. We will start with the July 10th, reviewing the summary of the subcommittee actions, our minutes. Did everyone have a chance to review them? Have any modifications or changes? Anyone? Hearing none, I would take a motion for approval.
This is Gerald, and I'll make that motion.
Thanks, Geraldine. Do I have a second? Sherry seconded in the chat pod. All in favor say aye.
Aye.
Opposed, same sign. Oh, it looks like Amy and Sherry and Susan are in the chat pod. They're all aye to approve. Opposed, same sign. Motion carries. We'll go on to the financial reports. First, we'll start with the accounts receivable update from Lisa Long.
Good morning. So we have 3 counties with outstanding balances for their maintenance invoices. We have communicated with all of them and know that those will be paid before the end of the month. I would be happy to answer any questions.
Thanks, Lisa. Anyone have any questions? All right, we'll move on to with Samantha. We'll start with the August summary of the July ESS payments.
Okay. Accounts payable for July consisted of several items we don't normally see month to month. The Iowa Solutions bill for $364 is a normal bill. However, this will be less starting in August with one less computer being monitored. The second bill for Iowa Solutions in the amount of $330 was for the additional hours the Iowa Solutions was in the office in June. We scheduled some extra time for the company to assist us in removing Census as the SharePoint owner on several groups and made Lisa the new owner of those groups. And then also on June 12th, Wyatt was in our office helping to remove old equipment and recycling that old equipment, and then also reorganizing the rack in Phil's office. You'll also notice the first bill from Kelly Wallace for consulting services for the virtual machine migration. Our insurance with Travelers also did renew in the month of July for $39,782. This is an annual expenditure and was within the original budgeted expenses for insurance in 2025. Next on the list, you will see the first 2 expenses for maintenance with local service providers. Data was able to send us their invoice for $585.15 for their service for imaging in Mahaska County. And then COT was also able to send us their invoice for local service providers for Polk, Cass, Union, Dubuque, and Johnson counties. As a reminder, these are for the last 6 months of 2025 with new invoices coming from service providers for calendar year 2026 in the first couple months of 2026. We have received an invoice for solutions earlier this week, and we have been in communication with DevNet Avenue and Tyler. Credit card expenditures for July that we're not used to seeing month to month included 2 expenses to Priya. These are for the annual conference, 1 in person and then 1 virtual registration. I'd be happy to answer any questions on the payment reports for July.
Thanks, Samantha. Does anyone have questions or comments? Give you a little chance in the chat pod too if you need to type. Hearing none, I would ask for a motion for approval.
This is Mel. I can move to approve.
Thank you, Mel. I will go ahead and, it looks like Susan Smith was going to second the motion. All in favor say aye.
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 Aye. Amy, Sherry seconded in the chat pod. And Susan Opposed, same sign. Motion carries. Okay, we'll move on to the August Fund 255 reimbursement invoice.
This is our monthly invoice to the state treasurer's office. Fund 255 funds come from the $1 fee that is attached to every recorded document in the state of Iowa. Income for this has been up a little this year and is overall above what we initially projected almost every month. We have worked it out with the state treasurer's office that we would bill for the income in the previous month. The amount of the reimbursement invoice this month is $44,063.22. If you look at the supporting documents, this is the first time probably in years that the reimbursement invoice has actually covered payroll in total. Sorry, it's a little, let me make it a little smaller so you can see it. We have lost a couple of great people this year, and then we also have another one out for a little while, so we do not expect the income to continue to cover payroll expenses going forward. I would be happy to answer any questions. Otherwise, I would ask for your acceptance and approval to submit this to the state treasurer's office.
Any questions for Samantha? Well, hearing none, you guys are very quiet today. Hearing none, I would take a motion for acceptance and approval. Sherry Jones moved. Amy, would you like to second in the chat pod? Amy, second. All in favor, say aye.
Aye.
Aye. Amy and Sherry, second in the chat pod. Opposed, same sign. Motion carries. Okay, we'll move on to the lengthy June second quarter and FY 2025 year-to-date financial reports with Samantha.
On the Bankers Trust account opened and closed with a balance of $0 for June. The account was successfully reconciled. The Bankers Trust sweep account opened with a beginning balance of $1,211,936.94 and closed with an ending balance of $1,316,533.23. Interest for the month was at 1.69% with an interest income of $1,677.09. This is slightly up from what we have been seeing over the last 7 months. When we first started inquiring about the account, interest was quoted at 1.8%. However, the market wasn't that great when we actually were able to start the account. And for the last 7 months, we've been seeing about an average of 1.3 interest. The ESS administrative team was able to meet with 2 Bankers Trust representatives at the end of June. During the meeting, interest rates were discussed. The new rate is a part of a strategic update that Bankers Trust has made to stay competitive and offer more value to their customers. So at the very end of June, just last few days, they were able to move us up to 3%.
Great.
And so starting in July, we did see that increase. I believe interest for July came in at about 3,200 or so, and you'll see that at the next meeting. So a pretty big increase. The reconciliation for the sweep account. All right, and the drawdown account with a cleared balance of $110,190.40. All right, June profit and loss budgeted $159,499.46 in budgeted income, with budgeted expenses coming in at $150,237.23 for a budgeted net income of $9,262.23. Revolving income for the month was $3,963,924.68, with total income at $4,123,424.14. During the month, we did move the AccuSoft Prism back to the budgeted expenses. So you'll see this that expense highlighted at the top here. And then when we moved that, it did come out of the software license expense. So this -13 is a combination of that 25,000 for Prism and then also the DB2 that hit in June. Revolving expenses at $3,981,030.55, with total expenses for the month of $4,140,628.41, with a total net income of -$17,204.27. June comparison to 2024. Money market interest up 100%. This is due to us not starting that account until November of 2024. In 2024, we did sponsor the deputies conference, and in 2025, we decided to not do that. Point of sale service fee income up 73%. An extra $6,909.92. And then the OD Lynn County service fees was up $228.58. I think that the 14,842.9% makes it seem like we received a lot of money, but really it's only up $228. The point of sale and OD service fees and sales will start declining. I believe boat renewals without having to pay a late fee ended on June 30th. So this is not expected to continue to be this high. Service fees for e-submissions up 27%. In 2024, we billed for maintenance service fees in the month of June. In 2025, we billed for the last 6 months, actually in May. So that's the difference here of $184,241.82. Total income for the month was down 48% compared to last year, mostly due because of those maintenance service fees being billed in a different month. The annual audit, this is a normal expense. Just in 2024, it was billed in a different month. All the items listed in green. In 2024, we had 2 bills in June just as a catch up. So normally Phil would bill in the month after the services. And when we had the 2023 audit, we had to move that January expense back to December of 2023. So this is just, we're catching up for 2024 in June. Government relations. Last year, I think it might have been the November, possibly the August meetings. We decided to start paying Rafferty Group $2,500 instead of $2,000. So that's what this increase is. This was voted on and approved by both committees. bank account analysis fee. So in 2024, before we started the sweep account, we were getting that savings credit. But since starting the money market sweep account, we no longer get that savings credit. So that's what the increase is here. Gateway transaction fees. With higher sales comes more fees for ACH, credit card fees, etc. So there's an increase here of about $8,000. However, we did receive, an extra almost $30,000 in fees. Policy coordinator, in 2024, we did have a full-time policy coordinator. That position did end at the end of May. So this $1,700 here is actually May payroll, just hitting and being paid out in June. And the AccuSoft Prism expense, we talked about a little bit ago. We're just moving that back to the budget. We did move this back to the budget in 2024 as well, but we didn't do that until later in the year. The SUS expense is a normal expense. Normally this would hit in July, but it did hit in June this year. Development team. So we did lose our technical lead earlier this year. The technical support and development position did move up and take that technical lead starting in June. And now the technical and support development position is vacant. Forward file redaction. This is a normal month-to-month expense. However, starting in June last year, Tyler did have a cyber event, which ceased billing for a few months. I believe it started back up in September of 2024. Total expenses increased by 23%. Most of this has to do with just moving that AccuSoft Prism expense back to the budgeted expenses earlier in 2025. Net income decrease of 95%. This is kind of a combination of us moving that AccuSoft Prism expense back to budgeted expenses in June, and then also the maintenance fee income coming in 2024 in June instead of in May in 2025. Can I answer any questions before we move on to the second quarter financials?
Any questions, guys? From the group? Keep going, Samantha. Good job.
Second quarter profit and loss, budgeted income came in at $593,912.02 against budgeted expenses of $432,037.48 with total net income of $161,874.54. Revolving income for the second quarter came in at $11,067,215.16 with total income at $11,661,127.18. Revolving expenses at $11,070,193.33 with total expenses for the second quarter at $11,567,310.75 with total net income for the second quarter of 2025 at $93,816.43. Year to date, budgeted income was at $1,029,195.24. 195 dollars 24 cents. against budgeted expenses of $766,085.68, with total net income for the first 2 quarters of 2025 at $263,109.56. Revolving income for the first 2 quarters, $19,738,052.40, with total income at $20,767,247.64. Revolving expenses at $19,729,741.48, with total expenses at $20,659,223.97, for a net income for the first half of the year at $108,023.67. The first half of the year compared to 2024, money market interest up $8,397.86. Point of sale service fees up 71%. OD service fees up 5,407%. This is mainly due to the boat renewals. E-submission up 20%. Fund 255 for the first 6 months has been up 11%, so an extra $25,798.32. The maintenance fees. So in 2024, we were billing. Sorry, that thunder is really loud. We were billing for the whole fiscal year. So in 2024, we billed for the whole fiscal year of 2025. Starting in 2025, we only billed for the last 6 months. And then starting in 2006, we will start billing for the whole calendar year. Total income up 8.1%. The audit, this was just billed in the remainder of the bill for the annual audit was billed in July, so this will catch up next month. Office tech support. I believe we started with Iowa Solutions in 2024, so this is probably the setup fee in 2024. Bank analysis fees up 244%, mainly due to us starting the money market sweep account and losing the savings credit. Gateway transaction fees are up 31%, just due to the increase in sales in 2025. AccuSoft Prism, we talked about a little bit ago. We just moved this to the budgeted expenses later in 2024. SUS will catch up later in the year. Normally billed in July. Total software and license maintenance expenses up $30,000, again, just because of that SUS in Prism. Forward file redaction up 54%. Developer equipment up $9,000. In the month of May, it was approved by both committees to update the developers' computers. And then system equipment for $775. This is due to a bill, I believe Arion. Bill might have to correct me on that pronunciation. A bill from 2023 when we started to move to the cloud. We decided to switch to Light Edge Solutions. However, we still owed that $775 for the contract that we signed with them. Total expenses up 14% and total net income down 6.5%, mostly due to the maintenance fee income being almost double in 2024. Balance sheet for June, $651,382.14 in the banker's trust checking account. This is the total of unreconciled transactions in the accounting software. As a reminder, all of our money really lives in the money market sweep account, which at the end of June came in at $1,316,533.23. With total assets and liabilities at $2,939,346.99. Journal entries for June. The first two are just showing you the move for the AccuSoft Prism expense out of the reserve account and into the budgeted expenses. The 23 cents on June 17th for Jackson County. In June, I sent out that email to all counties that use our POS system. They had a couple updates. They had not set us up correctly last year and needed to change a couple things on everyone's system. And this 23 cents is actually what kind of started that conversation. They didn't have the correct percentage. So if someone was to charge a partial amount on one card for the same transaction and another portion on another card, that fee wasn't being calculated correctly. The return check for Mancy, we reimbursed her for, I believe it was a computer cord or charger. So I sent a check out to her. Either that check never arrived or she forgot to cash it. So it was returned to us and I just wrote her another check that same day. And then the depreciation for the month of June at $22,604.75. Credit card expenses for the month of June with the balance of $2,464.20. And that account has been successfully reconciled. Fund 255 had a beginning balance of $156,391.02 with an ending balance of $166,067.52 with total receipts of $44,063.22, and this is consistent with the Fund 255 reimbursement invoice that we approved earlier. In the reconciliation for the account. June profit and loss with a net income of $9,676.50. In the balance sheet with total assets and liabilities at $166,067.52. I'd be happy to answer any questions on the June second quarter or year-to-date financial reports.
That was a lot. No, I don't have any questions, Samantha. You did a great job and I was able to review it earlier. So does anyone else? Yeah, Sherry Jones echoed. Thanks, Samantha. Are there any questions from the group?
Just great job, Samantha.
Yeah, I'm happy to see that ESUB is up. That makes, I know it's too early to celebrate, but that is good. I don't know, as we worry about the economy, it's nice to see that go up just a little bit. So anyone have any questions at all? Comments? Hearing none, I would take a motion for the June, the second quarter, and the 2025 year-to-date financial reports as presented by Samantha.
This is Geraldine. I'll make that motion.
Thank you, Geraldine. Do I have a second? Amy in the chat pod, second. All in favor say aye.
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 Aye. Looks like Sherry, Amy, and Susan seconded in the, or not seconded, eyed in the chat pod. Opposed, same sign. Motion carried. Once again, Samantha, thank you very much. Well done. Okay, we'll move on to the 2024 audit report. Robert, do you want to talk first, or Phil, would you like to caveat into this, or?
No, I'm ready to hand it off to Robert,
Okay.
so, and then I'll add color commentary as necessary. Thank you.
Sounds great. Thank
Excellent.
you, Robert. The floor is yours.
Thank you, Stacy. Good morning, everyone. I think most of you have sat through one of these presentations in the past, but just a quick reintroduction. My name is Robert Endres. I'm a partner with Denman CPAs here in West Des Moines. Denman's been doing the audit work for ESS now for the past several years. We were back on site here in April doing our audit field work again. We do have the 2024 audit report to go over with you, share with you this morning. As I go through this, please feel free to interrupt and ask questions if any come up as we have this discussion. Before we actually talk about the audit report itself, I did want to just pause and reflect on what you guys just did over the past 20 minutes, which is a really important part of your fiduciary responsibilities, members of governance, the overseeing of the financial statements, the financial preparation work that staff are doing. So I do want to commend the organization for that very diligent review of your internal financial statements. It is a critically important part of how the control environment works in an organization like this. It's a small staff. It makes it all that much more important that governance is providing that financial oversight. And these careful reviews of the financial statements on an interim basis are really important. And so is the audit process. So the document you have here in front of you, currently on your screen, is what we call a governance letter. This is, sometimes I jokingly refer to this as our dirty laundry letter in our profession. If I have concerns, complaints, issues, things that we think warrant governance's attention, your guys' attention, I'm going to talk about it right here. As members of governance, I hope you never have to read an interesting governance letter. Normally that indicates something not great is happening and something that we really are concerned about, something that really warrants very close scrutiny. I'm happy to say that you do not have an interesting governance letter to read this year. I'll also tell you that I'll never surprise you with an interesting governance letter, so you shouldn't be alarmed going into a meeting stressed whether or not Denman's going to say anything interesting. If we did, you'd get a phone call from me. But a couple things here that I do think warrant your attention as we talk about this document. Where we have that currently listed on the screen, a reminder that all financial statements do have estimates in them. Management's responsible for those estimates. Management's responsible for ensuring that they're reasonable and appropriate. We do look at management's estimates to make sure we believe they are reasonable and appropriate, and we do believe they are in this instance. But we do need to recognize that they are estimates and they are subject to change. If we scroll a little bit further through this document, a couple of the more important things I'll mention here at the very top of page 2. Difficulties encountered in performing the audit. I don't have any. Corrected, uncorrected misstatements. As part of our audit procedure, we're always going to make a few adjustments. As part of the process, especially for some, I'll call unique and accounting concepts and transactions. They're very, very incidental. And I say that to give you more confidence than ever that those records that you just spent 20 minutes looking at are very, very accurate. We're not having to fix those, which is really, really good news. What you're looking at month to month, quarter to quarter, generally speaking, is a very, very accurate reflection of the system's financial position. And then finally, disagreements with management. Once again, we do not have any. Staff have always been fantastic to work with. We really appreciate their partnership. They make our job quite easy, which I'm sure they cannot say in return. I know I and my staff are a big nuisance to Sam and Phil and Lisa and the rest of the team as we come in and interrupt their entire week each spring. But they've been fantastic to work with, and we're very, very appreciative of that. Jumping then, unless there's any questions, to the meat of our documents here, the actual audit report itself, which I presume is going to be the next document we have here. So I want to get started here on page 3 where we have our independent auditor's report. Yes, that one next page down. This 2 or 3 page letter Hasn't changed a ton, but just a couple reminders here what you're going to find in this letter. The financial statements we're about to look at are management's financial statements. So management is responsible for ensuring that they're complete and accurate, that they conform with accounting standards, and that internal controls are in place to support the accuracy of those statements. Our job as your auditor is to perform an audit and to express an opinion on whether or not those financial statements are accurate. We have a series of audit standards called government auditing standards. The exact same standards, by the way, that your county is going through during its annual audit. Are those same concepts and procedures are applied to ESS as well. We're required to test financial statement transactions and balances, look at those processes and procedures that staff are using so that we can gain an understanding and express that opinion, whether or not our professional opinion is if these financial statements present fairly. As part of doing that, we do look at the controls that ESS uses in preparing its financial statements. We'll talk about that real briefly here at the end, but we aren't auditing internal controls. That's like a very different type of engagement that is very rare for organizations to go through. Your counties also don't go through an internal control audit. Your auditors are also simply gaining an understanding of those control concepts. As part of that work, if we do find a deficiency in the controls, we'll talk about it. We'll let you know about it. And again, we'll bring that up again a little later in this conversation this morning. Two things here worth noting that are just a little unique with ESS's financial statements. At the bottom of this page, a paragraph there, change in accounting principle. Every once in a while, our professional standards change the rules. And when they do, we have to disclose it to you saying, hey, the rules changed. And in this case, the rules did change this past year for all governmental entities, which ESS is, related to how we account for compensated absences, sick leave, PTO balances. So that's been identified and captured within these financial statements. It was not a significant rule change for ESS, but we did feel warranted that we acknowledge that this rule did change. And then right below it, basis of accounting, this has been here forever. As a reminder, that Fund 255 is a state fund. It is within the state's treasury. The state audits it, and it is excluded from these financial statements. For the most part, there's a little bit of interaction, of course, when we talk about how ESS functions with that Fund 255 that we're going to see here. But globally, the state of Iowa is responsible for auditing and maintaining the accuracy of those resources. ESS is not picking them up within the set of financial statements we're looking at here. I guess I don't think I've actually said this yet, but we are issuing what we call a clean or unmodified opinion on these financial statements. And that's actually at the very, very top of this letter. That's kind of what we start with. So you are having that clean, unmodified opinion, which everyone's hoping to get when we get into an audit environment. Jumping then to the next part of the report, which begins on page 6 of our report, but I believe you're now on page 187 of the documents. This is our management discussion analysis. This is written in large part by Phil and the team, explaining the financial statements for the year, what happened, what occurred, so that it provides a more of a abbreviated version of the financials. I'm going to skip right over this, though, other than to encourage you to read it because it does provide some good context. Because everything that's in those 3 pages is repeated in a little bit more depth beginning on page 9 of our audit report with our balance sheet. That one here, or what we call the statement of net position in this environment. So balance sheet, though. Just a couple of highlights here I'd share for you. You have the year ended December 31, 2024 in that left-hand column, the prior year to compare against there on the right-hand side. Cash position about 1.6 million, up just a shade over the prior year. We'll take a look at what's going on with cash here in a little bit, but very, very stable there, as is most of the balance sheet. Not a whole lot of major swings, particularly in those current assets, totaling about 1.9 million in both years. Under the capital asset header, a couple of changes here that you might recall that happened in 2024. ESS moved to a cloud-based environment for most of its IT systems and services, and you're seeing the impact of that. The computer equipment, that first line item, was disposed of during the year, and you're bringing on what we call subscription-based IT arrangements, about $270,000. Mostly just an in and out there, and without a huge cash injection necessarily. Towards the bottom of the balance sheet, then, you have our liabilities. Again, not a whole lot of drama here or excitement. I will point you to 2 new line items there, also related to those IT subscriptions. So you have a right now to those IT services, but you also have an obligation to pay. So an asset and a liability comes onto the books. Total net position of the system at the end of the year, 2.2 million comparing to 2.6 last year. So a decrease there of about $400,000. And we'll take a look on the next page at what drove down that net position with our income statement. First thing I'll point you to here is recording fees were up. They had a pretty nice jump in 2024 compared to 2023, but of course 2023 saw a very large decrease. So you got some of that back, but you are still down, we'll call it 3 million from that 2022 high. So it's clawing back, but we're not quite there yet. Total revenues of the system during the fiscal year, 36.8 million. Again, a fairly decent increase from the prior year. Expenses follow, and again, most of those revenues are going straight back out to local county recorder's offices. The two swings you are going to see here is with salaries and payroll, right down there in the middle. And that's a little unique because in the prior years, ESS has been making some pretty significant investments in internal software. And when we make those investments in internal software, you're deferring those payroll costs. You're capitalizing it and depreciating it. Those investments weren't being made in 2024. Instead, you're simply maintaining the system that's in place, which means you get to recognize those payroll costs immediately. On top of that add to the expenditure line items here, right below it, 2 lines down, is depreciation. Because we deferred those costs in prior years, you get to take it in the current year. So you really kind of got a double dip there of expenses being captured now that we're depreciating those assets that were created. Frankly, in an environment like yours, the income statement is going to show some irregularities as far as the operating results. The cash flow statement, which we're going to get to here in just a second, actually does a much better job at reflecting operations. As a whole, though, total expenses 37.2 million, up from 34 million in the prior year, which is going to produce that change in net assets, a deficit of just short of 400,000. The final financial statement is that cash flow statement, which I was just alluding to here, and this is, in my opinion, the most useful of the financial statements. It's going to take away some of that noise we just looked at on the income statement and get back to how was cash generated and how was cash used by the organization during the course of the fiscal year. And again, you have the prior year there to compare against as well. A pretty busy schedule here, but what I want to point you to is that first subtotal, net cash provided by operating activities, to the good of $150,000. And that's what was generated from a cash position from the day-to-day core operations of what ESS was doing. So a modest cash increase from those core operations. Now, right below it, you do have some investments, effectively the organization reinvesting in some of its operations, most notably through the acquisition of IT and other capital assets. So an investment of about $80,000 in 2024. You compare that to last year, where there is quite a substantial investment in resources for future benefits. That was mostly, I think it was entirely internally generated software. So major investment in the past several years that we're slowing that down now, ESS is, and simply utilizing those systems that now are in place. And that's going to be a cash saving endeavor over the long term. In total cash position, pretty stable, up about 70,000. That's right in the dead middle of the page, 69,397, compared to last year where there was a cash usage of about 420,000. Again, that cash usage in part due to that investment in future development systems, and also because of those lost recording fee revenues. But this year, a much more stable cash position, operations showing a very slight increase. Following the financial statements, there's 3 or 4 pages worth of note disclosure, which is intended to provide the reader of the financial statements with some depth, some context to the accounting policies and practices being used. Not a lot of drama or excitement here, but I do encourage you to read it because it does provide some good clarity for those of you trying to get your hands around the financial concepts that ESS is enacting within its financial statements. I am going to skip over most of that, though, and instead point us to page 16 of the audit report, which is right here. Previously, I did allude to our work related to internal controls. So just to reiterate myself here, we're not testing internal controls, but we are gaining an understanding. We gain an understanding of those internal control concepts and practices that ESS uses. It helps us do a better audit, helps us inform this testing that we feel like we need to do. And that's why we do gain that understanding. But along with that, we do have a professional responsibility. If we identify deficiencies in those controls and processes, we have to vet those, evaluate those, and if necessary, elevate them to you as members of governance. And this is a public document to the world. So if we identify those deficiencies, they do show up here. It takes us a little while to say all that. But I'm happy to report that we did not identify any deficiencies in internal control that we considered to be material weaknesses. that really covers my prepared remarks as we walk through these two documents. Can I answer any questions from the group regarding our audit, the financial statements, the work we do for the organization?
I just want to echo what you said earlier. We greatly appreciate the work of you and your team. I've said this in prior years. Every time we go through an audit, we learn something, we gain some insight. Sometimes the rules change and we have to do things differently. And as a result of the audit process, I think successively we get better at financial reporting. We get better at managing our internal controls, and we very much view the audit process as a very constructive exercise. And I would just kind of say the same thing Robert did. Robert and his team are great to work with. One of the biggest benefits, I think, is a few years ago, this started to happen, and I think we've gotten better at doing it. But the Denman team will give us a very long list of homework assignments. And every year, we get the homework list a little bit earlier. And that means that when the audit week shows up, everybody's better prepared, and it becomes much more efficient. So I just want to thank the Denman team for, being so organized and helpful in the whole process.
Thank you, Robert, and thank you, Phil, for your comments. Any questions or comments for Robert from the group? I just appreciate it. Our state auditors are here this week, so I got to visit with our state auditors yesterday. So a lot of the things that you were talking about is, making small little changes, and it just makes it go a lot faster. So our first pre-interview yesterday was like 2 snaps. She's like, "Oh, you already did this, you did this," and so that's kind of reassuring. So we
Yes.
kind of work on it and get better and better. So. Any other comments or questions? Well, hearing none, I would take a motion for approval for the 2024 audit report. I will go ahead and make that motion. Do I have a second?
This is Geraldine. I'll second.
Thanks, Geraldine. It's been moved and seconded. All in favor say aye.
Aye.
Aye. Sherry, Susan, and Amy are ayes in this chat pod. All opposed, same sign. Motion carries. Thank you again, Robert. I appreciate your time today.
And before Robert leaves, I want to just mention one other thing, and that is that, sort of in the context of, ESS operations and how we do things. And, a year or so ago, there were comments about how we needed to do some investments. And actually, that did provide some impetus for us to be a little bit more assertive in exploring options. And so we went back to Bankers Trust and we established, with their help, the sweep account, and that is providing some net benefits to the organization. So I would use that as an example of the ongoing dialogue of figuring out how to do things a little bit different. Another thing that has kind of been in the background discussions that we've heard is, why do you keep such a large balance? Why is it done that way? And my answer to that has been the need for cash flow, because the main thing we're doing, and the final analysis is we're receiving money on behalf of counties, and then we're getting it distributed back to them. And the reality of the current financial system, that may change at some point where payments move more quickly, but there is some delay in when we charge a customer for when the money clears and actually ends up in our account. Yesterday was a great example of that. And Samantha, I don't know if you've calculated it for all 3 first days of this week, but we had over $400,000 in transactions yesterday in the submission. We don't have a policy of, well, we'll wait a couple of days to get it distributed. We distribute it the same day. And it was big enough yesterday that we said, is Bankers Trust going to let us move almost $500,000, through the ACH system? And we had to go check with them and say, okay, is this going to work? And it did. But we couldn't do that if we didn't maintain the cash balances. So, it is not uncommon for us to have to distribute $700,000 or more in a week. Sometimes when we haven't actually received the money in the bank yet. There have been times where we've exceeded $1 million in distributions in a week. And you can't do the distribution if you don't have the cash in the bank. So, for those who, kind of question why do we retain a balance that big? Cash flow is the main answer. And the other answer is there are certain things that we have put in to reserve so that we can do the kinds of things that Robert was referring to, and that is make internal investments in our system and our software. So I would say that we're doing it the right way. And I'm not saying that there isn't room for improvement or room for us to analyze it and see if we could refine it. But the way we're doing it is for the right reasons, and we're doing it the right way. So that's a part of the audit process too, you know. Uh, if that was being abused, I think somebody would point it out, but it just isn't that way. So that's all I have. Thank you again to everybody for your patience and to Robert and his team, and to Samantha and Lisa for all their background work and getting it done.
Yeah, just to
Bill, can I
reiterate,
just, oops, go ahead.
sorry, just to reiterate what Phil said there at year end, we talked about 1.6 million in cash on hand. 800 of it is outstanding. It's unclear transactions. Those deposits hadn't quite hit the bank yet. So half that cash is a couple days behind and coming your way and known to be coming your way, but it's not really there yet. So it's a significant amount of float that ESS is having to carry for the counties.
And just this week, Monday through Wednesday only, it's almost at $120,000. So by the end of the week, it's going to be well over $1 million that we won't even receive until next week.
Samantha, do you have total distributions so far this week?
Yeah, it's about 120,000.
No, it's more than that because yesterday was 417.
Sorry, what did I say? It's about 820,000.
Thank you.
I'm not sure what I just said, sorry. Yeah,
So
so
this-
by the end of the week, it will be over $1 million.
Thank you, Robert, and thank you in advance for also coming to the ESS meeting in a couple weeks.
Yes.
Kind of doing a double dose presentation, but we felt it was important, so thank you.
Yeah,
Certainly,
thank you,
certainly.
Robert.
Yes, thank you. Take care.
Yes. Okay, we'll move on to the 2025 budget amendment with Phil.
All right, everybody, if you want to advance to, I think we're on page 199.
Do we do a fifth inning stretch or a seventh inning stretch or whatever they call it?
Yeah.
So-
So I think it's on page 199 of your packet if you're
Mhm.
looking at home. And there is a cover memo that goes with it. I'm going to mostly walk through the spreadsheet though, but the cover memo really is intended to give you the overview and you may want to refer to it for any questions. So Samantha, you want to go to the first page of the spreadsheet and then maybe expand your view a little bit so we can read the numbers a little bit more clearly. And I will try to be quick. So as with past convention, when I present this report, if you see the items that are in the burnt orange type of color, they're basically converting budget to actual. So those are actual numbers, and that's what really happened. And so you incorporate that into your revised budget, and then you make adjustments in the succeeding months to make to make up for anything if they have to, or to move money around in order to make things work. The column that is in blue is essentially actual numbers, but it hasn't been fully reconciled yet, or we haven't brought it to you for approval yet, which we'll do at your next month's meeting. But they're known numbers, and so we take the known numbers, the actual numbers, even unreconciled, and incorporate them into the budget amendment so that we can be as accurate as possible. And then anything you see that is in the gray color is a change that we're making when compared to the budget amendment that you approved in May. Okay, so it really does reflect a change that we have made, and it is worth making note of. So the first thing I want to talk about is that, as Samantha pointed out, uh, you know, um, you didn't see it in this month's financial report, but the interest earned in the month of July was $3,299, which is a substantial increase. So we really don't have enough of a track record to say, well, let's jump up all of the future numbers to that high of a level. But I think we can reasonably say we expect our interest income to go up in succeeding months. So we've increased that to $2,000 a month as an estimate, and that's really all it is. And you're comparing it to the original estimates that we had, which in the previous budget amendment, which is about $1,300. So we bumped that up a little bit. The item on the on-demand service fee is just a small adjustment to reflect that, the on-demand stuff is kind of waning. We may see it uptick again in the fall. All of that is related to Lynn County. These are only Lynn County transactions, and so we don't generate a lot of revenue from it. But we did see activity in that system increase this year, and that's reflected in the actual numbers in the first half of 2025. The point of sale service fee, um, we have had a good period of time in the first half of the year with income from point of sale. But having said that, we really did not want to make adjustments that were significant to be overly optimistic. And so the changes that we had made there really, we went back and looked at what the actual numbers were in 2024 and said, let's make an adjustment there just to kind of estimate based on the previous year's experience. And so relatively minor adjustments there in terms of the actual numbers, not really a big budget change. I think notably in the income side of this budget amendment, elsewhere, we really aren't making big adjustments. So last time around in May, we said we think we're going to estimate $85,000 a month in income from the combined e-submission service fees. I just have to say, the experience that we've had with e-submission in the first half of 2025 defies every expectation. It defies logic. With things going on in the economy, headlines every day reporting that the real estate market is down, and yet we continue to see recording activity. We actually, in the month of July, had e-submission numbers that were equivalent to 2022, which is totally unexpected. But I have to say, and at the end of the year, you can mark me down as a pessimist, but I have to say the bubble is certainly going to burst, right? And so not wanting to be too pessimistic, but uh, keeping the same estimate that we had really from the beginning at about $85,000 a month. And if we do better than that, that would be great. And I'll talk a little bit more about the options that gives you as we go forward. Same thing for the point of sale. I'm sorry, for Fund 255. We were not overly exuberant about expected income there. And we're keeping it, or I'm recommending that we keep it at that $40,000 level. Although for the last 2 months we've been at 44,000 or 45,000. But the prior months of that suggests that, you know, the actual recording volume in Iowa counties, e-submission and traditional combined, uh, it's not what it used to be. Those numbers used to be about 60,000 a month. If you go back to 2004, 2005, the period before the real estate bubble in 2007, we have big numbers there. And since that time, overall recording activity is not what it used to be. But we have to estimate something. So I'm going to stick with the 40,000 estimate as we go to the end of the year for each submission. And if it's better than that, that would be great. And then if you want to do the comparison, um, in the budget amendment that we estimated back in May, we said we think we're going to have income for the year in the value of about $1.76 million. And where we are with the revised projections, based on what our actual experience is, and not changing our end of year estimates that much, it looks like the revision would be about 1.85 million. So we're doing a little bit better on the income side, but we're not projecting that. We're really basing that on what our actual experience has been so far this year. Okay. Questions about revenue before we leave that? Okay. Please feel free to jump in with questions or to throw a question in the chat pod if you want to. So now we're on the next page and we're beginning to look at expenditures. So again, burnt orange is actual, blue is actual numbers, but not yet fully reconciled. And then we're looking ahead to some expected numbers in the remainder of the calendar year. The first one I'll talk about is myself, the project manager. I am planning to take some vacation at the end of the year, and I only bill actual hours worked, and most of the time I put in more hours than I actually bill for. So I've moved my billing up a little bit in the last couple of months, just knowing that I'm going to be taking some vacation, so that it all balances out in the end. But the actual budget number at the end of the day is going to be exactly the same. The office supplies are adjustments that we made. We did spend a little bit of money on paper this month, and we know what that receipt says, so we added that. And then we adjusted the number for October just so that number would be essentially the same as what we had projected in May. And then I don't really have an explanation for why I made the postage in blue. That should have been white. I'm sorry about that. I might have moved it from one month to the other. Maybe that's what I did. Okay, then moving on, looking at the education and outreach budget. I had originally planned to participate in the career conference in the spring, and because of the legislature, I had to change that plan. So we took it out of the budget in May, but now I've been invited to participate in the pre-conference in the next cycle, the end of this month. And so in order to cover that, we really need to put money back into the budget to cover mostly those travel expenses. So that is the main reason for that adjustment. As far as the projections for the cost of some of the key positions like the account manager and the accounting coordinator, haven't changed a thing there. Those are the same as they were before. If you're curious about the column headings for May and October that are in sort of the the golden color. If you want to scroll up a little bit and just show that, Samantha, we just highlight those because there are 3 payrolls in those minutes, and that's all that is about. So looking now at the last page, looking at the category of software development services. So in May, we said, let's allocate some money in the budget to at least get started on some work relating to some special projects. One of those was the notification system that we've talked about. We've done some design work. We kind of know what we want to do. And so we went to our partner software development service providers to gain some estimates about what that would cost. We also asked about changes in the Back to Blue program that we anticipate based on the context of House File 1031. So we put $70,000 in the budget for that. And then when the cost estimates came back and we said, well, we didn't put enough in the budget for that. And we still don't really have enough in the budget for that. But we're getting closer. And by that, I mean, um, if you look at the net income numbers that you're going to see at the end of this presentation, it's going to be net income of over $100,000 easily. And that means that we could allocate resources from the reserve fund and make something like that happen. But right now, what we budgeted in the last period in May just doesn't even come close to being able to do that. So I've actually taken all of that out of the budget. So what used to be $14,000 a month are now zeros. But it doesn't mean we're never going to do anything. It just means it just doesn't make sense to have it in the budget that way right now. Then the next line, which relates to technical consulting, we set aside money to allocate because we were in the midst of some development work that related to our operating system, and then our technical lead took another job. But the technical lead, we're still friends with. I mean, I want to say that in a positive way. There's nothing negative that happened about his decision to take another job. And he is the most knowledgeable person on the planet about certain subject matters. So we had a conversation with him and said, would you be willing to do some side work to help us with some of those things? The main thing that we want him to help with is to complete the conversion from our old operating system to the new one, out of what we refer to as SUSC into a new product called Ubuntu, and we're not done with that. So we started that process in June and July, but during the transition in his job, and then his family took a vacation, the number of hours that he was able to dedicate to it just turned out to be not as much as we had hoped or planned for. And so I am not taking money out of the budget, but I'm moving it to the back end of the calendar year. So I don't know if he can work that much, but we're going to try and get that project done. And I'm not ready to give that money back to the general fund, general till. We really need to get that done, and I want him to be able to do that. So if you look at the revised projections, the original projection back in May was $19,600, and the revised projection is $19,485. And if you want to know how it's working, basically, we regularly meet with him, and then we are having him report his time just the way he did before, and then we are having him send an invoice to us on a monthly basis. And so I think we did hear some commentary along the way that, we were just going to be providing a monthly stipend and, sort of implying that we were giving it away. No, we are closely monitoring that work. It's on an hourly basis, and it's at a very reasonable rate. Typical consultant rate in the marketplace right now is about $185 an hour. And our former technical lead has agreed to do it for $70 an hour. So for outside services, we're getting a really good deal. I hope everybody will support that. The next thing I want to highlight is the DB2 line item. And DB2 is basically the IBM database software. And it is the database engine that we use for all of our systems, both in the search application and in e-submission. That is up for license renewal. The amount of it was $11,476. And we originally were saying, well, let's take that out of the reserve. We've had a fairly good period. We're putting it back into the budget so that it's transparent and known. But I have added $2,000 to the budget in October because we think we're going to need to secure some supplementary software that will communicate with IBM to verify the licenses that we are using. Some of you may recall that we had to make an extra payment to SUSC for licenses that were not tracked as closely as they should have been. We want to avoid that problem with DB2. And I have to say, pretty much every software vendor out there is tightening the screws in terms of monitoring the licensing that is being used, and we just want to be on the right side of that. I don't know if the number of 2,000 is right. I just suspect that we're going to be in that neighborhood, and I wanted to kind of put a flag out there in the budget to say, hey, we may have to spend this money to make that happen. All right, moving on down, I'm now at the local maintenance expenses. And you can see that in the month of July, we've expended $8,656 and change, and that was for data and COT. We have received invoices from Solutions and Tyler that they were wrong. And the way they were wrong is because we changed the term of this first period under the new agreements from 12 months to 6 months. And the right hand and the left hand and those companies just didn't know what was going on. So we've gone back and communicated with them. We think the service providers understand what they're going to do, but we are just going to be processing those in the next couple of months. And we estimate that that will amount to about $132,000 combined. It's not really a big change in our overall number, but compared to what we did before, but that's just where it is. Where the change occurs is in the last column, which you'll see the number $16,614 and change. So in the budget amendment that you and the ESS committee approved in May, we said we think we're going to have to give some extra resources to two vendors, DevNet and Avenue Insights, because they serve only one county, and they just don't have the breadth of counties to spread that cost against the same way that a Tyler or a Solutions might be able to do. And so we had conversations with both of those vendors. I came to you in May and said, I would like to ask your permission to put $40,000 in the budget to cover that expense and make sure we can get these two counties and their service providers connected to our new APIs. I think there was some questioning of that, but you and the ESS committee did give approval to that, which I thank you for. And now what's happened up to this point is we have current agreements with Avenue. So the agreement with Avenue has been updated. ZebNet completed their amendment to the master agreement. And Avenue did request supplemental compensation. And based on discussions with them, we settled on $15,000, not the original $20,000. And then DevNet, we got right to the point where we had an amendment drafted to their agreement to provide basically the same thing that we were providing to Avenue. And sort of on the last day, DevNet said, you know, we're not going to do that. Well, we're going to complete the integration, but we are not going to request additional resources. So that $20,000 is now out of the budget. So we're going to be able to get both of those counties integrated. The 20 changed to 15, and then the extra $1,614 is what we would ordinarily pay Avenue for the maintenance services. So that is why when you look at the numbers, it's about $25,000 less than what we budgeted in May. And that's because DebNet in the end didn't request it. And the amount that we agreed to with Avenue is less than what we originally budgeted for. The numbers of 132,000 and change, that really is the same as we've always planned on. We just had to spread the expenses out over a couple of different months. That was probably more than you wanted. I wanted to make sure we were clear on what we were doing there. Then the last thing that I'm highlighting is that our expenses for Vericheck and for professional solutions for our point of sale system, we have adjusted those because those are, especially in the case of professional solutions and our local point of sale system, those costs are higher than we originally estimated. And so we are making an adjustment there. The adjustment for Vericheck is fairly modest by comparison. We've had more activity than we originally projected in our point of sale system. And as a result of that, gateway fees are also going to be up as well. We do make some net income from our point of sale system, but it is not a huge driver of our budget. So for those who are wondering, we do get some net income from that. We're not losing money by doing that. And the point of sale system is probably the most expensive merchant fee that we have to pay, and that's why I've increased those numbers over the original projection. So with all that said, then the projected expenses in the May amendment projected expenses of $1,772,000 or $1,720,000. We're projecting with the adjustments that we've made, the staff vacancies and so on, that the projected expenses are going to be $1,628,000 and change. So our projected expenses with this amendment would decline by about $92,000. So if you take the decline of $92,000 in expenses and then the projected increase of about $87,000 in income, you end up with more net revenue. And so instead of the projected $45,000 in revenue from the May amendment, we're now projecting $224,000 in total net income. And this is kind of going back to my comment earlier. If this holds, okay, and there are no guarantees of that, but if this holds, then we are going to have probably enough revenue, enough income in reserve to maybe do the notification system, okay? And maybe even get started on changes to the Back to Blue program if it is approved by the legislature. So I am not making that recommendation today. And I understand that it's a discussion that will need to be had with the full ESS coordinating committee. But from a financial perspective, we're getting closer to being able to do something like that. And I just wanted you to be aware of it. So please don't anybody leave this meeting saying that we said we were going to do it, or that we're going to do it tomorrow, or that it's already been approved. I'm just pointing out the possibility. So the question on the table really is, I think in the grand scheme of things, the big story is revenue's up and we're controlling expenses. That's really the big story. And then we have some modest changes in a few parts of the budget. And I'd be glad to answer any questions you have. And I would request your approval of a recommendation to adopt these budget amendments by the ESS Coordinating Committee. I'll stop there.
Thank you, Phil. Great explanation. And wow, I couldn't believe that DevNet said we don't need any extra money. That's huge, really, to have, and for Avenue to have only asked for 15, not 20. I think that says a lot for those service providers, I think. So anyone else have any questions or comments? There's a comment from Aaron in the chat pod. You mentioned you were invited to PRIA. In that instance, why are they not covering your travel registration costs?
Because PRIA is a volunteer organization, and I don't. You have to be in the category of entertaining keynote speaker for them to pay you. Usually, that's the opening part of the conference. They'll bring in some outside speaker, but the part that I've been asked to participate in is a session they're going to do on aggregated data sets. And so there is a working group that has been established by PRIA that we had nothing to do with setting up. But basically, the idea of the working group is to encourage other states to essentially do what we have done, and that is set up collaborative systems to integrate data for the benefit of customers. And since we, in fact, have done that, they've asked me to be a resource in that discussion. I would say the main thing that needs to happen is that I haven't been able to attend PRIA conferences recently, and our recording vendors and many of our local vendors have representatives there. It's a great place to maintain those professional relationships, and I need to sort of keep those connections alive, especially in anticipation of some coming changes in our organization. So that's why that's why they aren't paying for me.
Thank you, Phil. Any other questions or comments? You guys are very quiet again. Well, hearing none, I would ask for a motion for approval for the 2025 budget amendment as presented.
This is Mel. I'll move to approve.
Thank you, Mel.
Smith, I'll second that.
Susan, was that you, Susan? I'm sorry. You
Yep.
cut out.
I'm
Susan,
back on audio now.
Oh, great. Awesome. All right. It's been moved and seconded. All in favor, say aye.
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 Aye. Looks like Sherry, aye in the chat pod, and Amy. Opposed, same sign. Motion carries. Thank you, Phil. Now we'll just touch on the ESS financial strategic review.
Right, and these are just some quick oral reports. I want to thank everybody for hanging around an extra half hour. This is the report I referred to. Actually, I misspoke. I said for the first time that we've seen numbers equal 2021, which is an even better year. So if you look at that green blob, on the gold line is 2025. We basically in July equaled the revenue and the e-submission activity from 2021, which was a very high point type of a year immediately following, the inception of the pandemic when we saw a big surge in participation. Happy to answer your questions about that, but otherwise, we have previously distributed the ESS annual report. There was a lot of financial information in that report. Everybody should have received a copy of that, and we encourage you to digest it, use it as a resource as you communicate with your supervisors and also with your stakeholders locally and even with your legislators, because, it's an opportunity for you to provide them with some facts, not misinformation about what ESS is and what it does. And then the last thing I'll mention is that in the Iowa Land Records website, in that accountability for reporting section, there is a full packet for the most recent ESS Standards Subcommittee meeting. I know you may have received a little bit of a blurb summarizing the last meeting. We'll be publishing the official draft of the meeting summary here shortly, but I would encourage you to if you have a chance, to go out there, download the packet from the recent Standards Subcommittee, and you might even listen to the recording if you had time. But one thing I would maybe single out from that document is that we are sort of in a new era. And the era is, maybe everybody doesn't want to be in the 28-year agreement. Maybe everybody doesn't want to follow the policies and procedures that are established by the governing committees of the 28-year organization. And I'm not making any judgment about that or not, but when you have that kind of a change in paradigm, you have to figure out new ways to do things. And one of the things that may need to change is that maybe the policies and procedures moves into a dynamic where it becomes the rules for members of the 28-year organization. And more specifically, when you have circumstances where some local service providers may not choose to participate in the maintenance agreements, you have to figure out, okay, how am I going to communicate what they need to be doing to integrate with Iowa Land Records if we don't have a contract? What other way can I communicate with them so that they know what they should be doing? And so there's a draft version of a new chapter 2 of the policies and procedures that attempts to answer that question. And so this was presented to the Standards Subcommittee at their most recent meeting. They decided that they wanted to defer any action on it until after the working group that's been set up by the association, the Recorders Association, to review the 28-year agreement and the policies and procedures. So I would, whether you're on that working group or not, I would encourage the finance subcommittee members to maybe go look specifically at that information and see what it has to say. If you have any questions, we'd be happy to try and answer them. There's no imminent action on it. The next meeting of the standards group would be in October, and possibly something should advance to the ESS committee at their November meeting. So it's there, it's information. It's food for thought. Would encourage everybody to take a quick look at it and digest it if you can, and then maybe add your opinion to the discussion as you feel appropriate. And other than that, I just want to thank Samantha for all her hard work in preparing for the meeting, and for Stacy and all of you who are members of the Finance Subcommittee. I'll echo what Robert said. We believe, have always believed, and continue to believe that you play a very important role in providing governance oversight for the operations of this organization. And I really appreciate all the time and effort you put into it. I hope you have a great rest of the August, and I'll see some of you at the summer conference soon, and some of you might be sitting in on the ESS Coordinating Committee meeting, which will be on August 19th at 1 p.m. And it's intended to be sort of in conjunction or with or adjacent to the Recorders Conference. If you aren't going to be here that early in person, the ESS Committee is going to be available for you to view and monitor on Zoom. So take advantage of that if you have time. With that, I don't have anything further. And again, thank you very much for everything you do.
Thank you, Phil. Thanks for that. Kudos to our our finance committee. So coordinating committee is August 19th at 1 o'clock. Our next meeting for finance subcommittee is September 11th at 9 o'clock. And anyone else have anything for the good of the group? If not, Amy said, thank you, Phil and staff. Enjoy the rest of August. Yep, we'll see a lot of you at ISAC Fall School. Thank you. Thanks, everybody.
Thanks, everybody.